So I'm Carly Ebenstein. I'm a specialist in long-term care insurance, and I'm here with my friend and client, Cynthia Cummins, who is a real estate broker in San Francisco. Cynthia, I really appreciate you having this conversation with me because when I'm talking to people, inevitably there are lots of assumptions that come up, and inevitably there's always something about the home. And I'm wondering what you see in your work as you work with clients in San Francisco.
Well, I know that in my own experience, um, I had assumptions like I can never afford it. Uh, when I was much younger, I had the assumption I think this is a funny one, that I would never grow old enough to need it. Like I couldn't imagine being older. And certainly a lot of people who are just beginning on the adulting journey, maybe they're just buying their first home, they aren't anywhere near thinking about this, and it probably should be something that they're considering. um,
Or at least on their radar.
yeah, I think it's one of the, if for life success people have a team of advisors, there should be uh, somebody who has financial planning expertise. I think there should be a realtor, because a dedicated real estate agent with a long-term relationship with somebody is going to act on their behalf with
Yeah.
great care. And realtors often have a bigger overview than do some of the other experts. But anyway, um, there should be a tax person. There should be estate planning. And and I think an essential part of this is thinking about um, aging
Hmm.
and long-term care. What what are you going to do when you start seeing a 6, 7, 8 in front of your age, right?
Yes,
Um,
absolutely.
and the
And I'll
time to
tell
think
you,
about that is a lot sooner.
at least having it be on your radar, if not actively talking to somebody. But it's funny because you laughed and said that you thought that you'd never get old. I think that's actually most people. All of a sudden they wake up and have this moment. And sometimes that moment comes because there's someone they know, a family member, a parent or a family member that all of a sudden has some kind of crisis
Mhm.
where they need assistance. And then it's kind of a wake up call like, oh, that actually could happen to me. Um, but there's so many assumptions, and it's also that it being too expensive. And what I tell people at the initial conversation is that we're not going to be looking at rates. People always ask me, how much does it cost? And that's like asking, how much does a car cost? Like, what kind of car do you want? What kind of features do you want? Like, there's so many variables,
Mhm.
but it can be crafted for people's budgets, crafted for what they're looking to achieve. There's so many questions to, ask. And if you're if someone is looking into long-term care insurance and not being asked a lot of questions like that, then I don't know that they're working with an expert.
I,
And
you
I
know,
would actually say, like, make sure you ask someone how long they've actually been doing it, and how many companies they work with. Do they have any clients on claim? Have they experienced the claims process? Those are really good questions to ask.
yeah, and or maybe they have a recommendation from somebody and they don't have to vet quite so thoroughly. They can rely on a recommendation. But yeah, I mean, I would think that um, it's such an important aspect. It's such of one's life. It's such an important decision. that uh, some care should be taken. And I love the car analogy. What kind of car do you want? Right? Like, um, what is your life expectancy? Where you how do you want to live out your life? And I we were talking about skiing before we started this recording. I was thinking about all the care that people I know might put into getting the right ski boot. Like there's all this online research. There's, trying to figure out, you have to decide, is it for alpine touring? Is it for downhill? Do I need two different boots? Do I need three sets of boots? Is there one that can do the whole job? And then, levels of cost and how it's going to fit. I mean, people spend a lot more time on ski boot decision than long-term care.
That's true. They do. Most people, I think, do. In fact, I think people are surprised when I kind of set the expectation about this being a process. And it's more of a process for some people than others. And that's not to say one is better than the other. Um, but some people, I've had some people make decisions very, very quickly, and other people take their time. And and sometimes when I say decisions, sometimes people make the decision to either purchase long-term care insurance and, they synthesize the information very quickly, but sometimes they make it very quickly and just, want to put their head in the sand, because that's something that I found is that the level of denial can go very deep for some people. And you and I were talking, we used the word holistic earlier, and I feel like this is just part of our holistic lifespan. And, you have an expectation when you're younger that you're going to do certain things, like probably get a driver's license. Some people know, but there's certain things. You start saving for retirement. Maybe you start saving for a home, having a nest egg, saving for different types of life events, whether it's honeymoon or a child's wedding or whatever it is. And it's like, this is something too that really needs to be out there. And I always try and tell people, look, you might decide to not purchase long-term care coverage. And I think most people should really have it. I have clients who are wealthy and probably could self-fund, but they recognize that they're buying, it's going to be less expensive. They'd rather finance part of it. But regardless of whether you buy it or not, and I should say, even if you do buy it, you should have a plan. Like,
Yes.
okay, you have this coverage, but that doesn't just take care of everything.
Mhm.
If something happens, do you plan to stay in your home, or do you plan to move to a some kind of community or assisted living facility? If you do stay in your home, who do you want to be involved in your care, at least overseeing, if not being actively involved? Who do you want to be helping manage your finances? Who do you not want to be helping with those things?
Kidding. Right. Who's going to show up? And there's an angle to that that I've encountered when it comes with to long-term care insurance and estate planning, where as I was saying, I'm never going to grow old. I'm never going to die. This isn't going to be a problem, right? It's not going to be a problem for me.
Sure.
I'm just going to have the faith that I'm going to be fine no matter what. So I'm not even going to think about it. But if you have any loved ones in your life or children, it's a very thoughtless stance. If you're interested in the well-being of your loved ones, your spouse who is not ill, who doesn't need long-term care, um, do you want them to be the one who has to carry the whole burden? Are you not going to help them? And I think some people don't think about that part. They think, oh, I'm going to be fine. right.
Hmm.
Do
I
you,
call that magical thinking.
mhm,
And there are some people that are fine. There really are. Like, I just spoke with my husband's aunt who's 93 years old and living in her home. Her husband just passed away at 94. He was in a facility. Um, but she's able to do it because she has a very strong family network that's nearby. Like, she was telling us, she doesn't cook anymore. They bring her all her meals, they spend time with her, there are all these things. And I actually think that she's probably just she's very fortunate to have her health. She's fortunate probably financially. Um, they bought their house for $20,000
right, right.
and it's in Huntington Beach.
Mhm.
Um, but she's fortunate. It's not that they planned this. And there are a lot of people that will not be so fortunate.
Right, and that can change at any minute. It can change. You know, one minute
Yes.
you're 93 and you're out walking your dog, and the
Hmm.
next day something changes. There's something significant, a stroke or you know, an illness that leads to, I mean, it could be my mother who's in her 80s just had um she's had both knees replaced, and she um helped care for my father when he had multiple myeloma, and they had long-term and care insurance, and that was there to help her when her knees were out and when she was caring for my father. And she just had her hip replaced. She's 87. And, you know, she had her long-term care insurance kicked in for the few weeks when she really needed some help. But it wasn't like she was signing up for moving to an assisted living facility, right? Just because she had
Hmm.
long-term care. What was great was she was able to, you know, get on the phone and take advantage of this resource. And now she's fine. She's playing bocce ball, winning the bocce ball tournament, and doesn't even need her walker. So,
I love those stories. And that's another assumption is that people think of for like long-term care means being in a nursing home or have some kind of long-term illness. I had one person ask me about a year ago, like, is long-term care like final care, like last expense, final expense? Is it just kind of the like hospice? And I said, not necessarily, not at all. And there are people, I'm so glad that you brought up that story because you can go on claim and go off claim and then go back on claim. And I heard this crazy story by an associate of mine who was talking to an older couple where this is very typical. The wife wanted to purchase it, but the husband was adamant that he didn't.
mhm.
And my associate actually talked to them, and the wife got a long-term care policy, but the husband, he actually couldn't qualify. And so they live in Texas, and they are different plans that are available in different states. And so the husband was able to get what's called a short-term plan, which lasts for a year at most. Well, 2 months after he got this plan, he was actually in a parking lot and a car hit him. And he ended up like, I forget, it was something serious. I don't know if it was his pelvis or both legs, but he ended up in the hospital for a while, like in traction. And then he was in rehab. And his short-term care plan kicked in and paid, and these people were in their like late 70s and paid for him to be at home, like paid for care at home. And he recovered. And then a year later, he had a serious stroke. And what happened with this particular plan is that the benefit, um, losing my words, but it basically reverted back to it was renewed. So he didn't use up that money. He actually had like a whole new pool of money because enough time had passed. And, by the time he actually passed away, because he did actually pass away eventually from this associated with this stroke, the plan had paid out over $150,000. Probably, I
Right.
think like 200,
Yeah.
something like that. And that would have been, I don't know how this couple would have managed otherwise.
Yeah.
So that's a very typical scenario. I don't want to